Good morning, ladies and gentlemen. It's a pleasure to be here this morning. My name is Pierre Ghislain. I'm the Director for Investment Climate in the World Bank Group. That's Bank, IFC, and MIGA. It's a pleasure to be chairing this session this morning. I'd like to first introduce my colleagues on the panel this morning. Mohamed Sherif to my left is the Director of BISCLIM, an EU-funded advisory program. Then to his left, we have Taz Anvaripur, who's Manager of Private Sector Development in the African Development Bank. And to her left, we have Michael Miebach, who is President, Middle East and Africa of Mastercard Worldwide. And then at the end of the podium here, we have Nader Moussavizadeh from Macro Advisory Partners, partner in that firm. So I think we have a great panel this morning. I'll start with a few words about what IFC and the World Bank Group are doing on the investment climate side in Africa. And I'll then turn to our panel members. We'll try to keep about 20 minutes for Q&A with the audience. First, I'd like to say one of the difficult things in investment climate reform, I would say, is that it's an essential but not necessary condition for investment, and it is one that is sometimes difficult to measure precisely. So we sometimes have difficulty with our clients in terms of pursuing the momentum because it's not always easy to see what it will lead to. Governments reform, they don't see investors coming the next day, they can lose some patience. So it's really important to get a dynamic going and sustain that dynamic. So the way I would look at it, if you look at what is driving investments in Africa and elsewhere, and what are the major drivers, clearly globalization remains, despite its slowdown, a major driver. We have clearly technology as a major driver of development. And one that I'd like to mention in terms of the political economy of reform is also the driver of benchmarking, of comparison, of my neighbor did this, maybe I need to get on the bandwagon as well and reform. And in that context, our Doing Business report, which you all are familiar with, is one of the examples of how that can get things moving. IFC and the World Bank are active on the investment climate side in, I would say, the majority of the 49 sub-Saharan African countries. At IFC, we have teams on the ground in 36 of these countries, including in 13 fragile and conflict-affected countries. Fragile and conflict-affected countries are a top priority for us because they are those that clearly need our help most, and stability and peace will require employment creation, jobs, etc., which is clearly, by and large, a private sector kind of business. Let me move now to, I mentioned globalization. One of the important things that has been a bit, one of the big challenges, I would say, in investment climate reform and in general in Africa is the fragmentation of markets. We have 49 economies, most of them quite small. These markets are clearly too small for most investors. And so regional integration and integration in the global economy are clearly important drivers on which much progress remains to be done. I'd like to mention some work we're doing with the East African community, which is probably one of the regional groupings in Africa that has advanced most in terms of aligning legislation and opening borders, etc. We're supporting the EAC on a series of reforms in the investment climate in the region, together with Trademark East Africa. And the reason I mentioned East Africa is to illustrate two specific examples that I'd like to mention briefly, those of Rwanda and Burundi. Why are Rwanda and Burundi reforming actively? They reform actively because they're small landlocked countries, they're small markets, and they know that their own stability, and you know events that happened there in past decades, their own stability requires better integration with their neighbors, requires access to markets, requires a more dynamic and vibrant economy. Rwanda is one of the leaders on investment climate reform in Africa. They have jumped tremendously in the doing business ranking. In the past 9 years, they have undertaken no less than 26 different reforms that have been tracked and measured by Doing Business Report. What I'd like to emphasize on Rwanda is not so much their success on that score, which is well known, but the fact that the government has a broad investment climate reform strategy that is part of a broader regional integration strategy and macroeconomic strategy. And in terms of some of the examples of what we've been working with them on, this is a very specific example, might appear a bit narrow, but is absolutely essential for one of the key sectors of the economy. We've helped them implement reforms in the tea pricing mechanism, the green tea leaf pricing mechanism. And so that specific mechanism has, that change in the pricing scheme has now allowed small farmers to increase their earnings significantly. 60,000 tea farmers are now getting increased revenue because the different market mechanisms that has been put in place gives them a larger part of revenues from tea, and will also lead to a significant expansion in the tea production area. That's one example of how a country starting with what might seem in some cases as easier reforms is moving to reforms that fundamentally open up a specific sector of the economy, in this case, a reasonably important one. Burundi has been encouraged and stimulated, I would say, by the example of Rwanda and their neighbors, and they have a very dynamic second vice president who's been leading for the past couple of years a major investment climate reform program. Again, they started from pretty low in the Doing Business ranking, and they have been implementing some significant reforms that have helped them move up the ranking. A one-stop shop has led, for business registration, has led to doubling of the number of businesses registered. They've also established one-stop shops for property transfer, construction permits. They have also harmonized their corporate income taxation regime with the EAC regime, lowering corporate taxes from 35% to 30%. These two examples, framed by the EAC regional integration dimension, was the examples I wanted to provide here as one of many illustrations of important reforms that are taking place in Africa. And on this, I'd like to conclude my own introductory remarks and ask Sherif to share his views with us. Sherif?
Thank you, Chairman. Good morning. Well, BizClaim is as Pierre said, is an EU-funded program that seeks to support improvements in the business and investment climate in Africa, but also in the Caribbean and the Pacific. We are demand-driven. However, I think I can make my presentation using 4 categories of interventions. The first one is what we call public-private dialogue. We have been very active both at the EU-Africa level, at the Pan-African level, at the regional level, and also at the national level. So we have helped countries to improve the dialogue between the private and the public sector. At the EU-Africa level, I think you are familiar with the EU-Africa Business Forum. We have been involved in its organization since 2006, and next year we will organize the 5th one. It's a high-level meeting. It is part of the EU-Africa partnership, joint strategy and partnership. So it's really an official event, and next time we will have all the main key players, both from the EU side. We will have President Van Rompuy, we will have most of the commissioners, we will have the Vice President Tajani, etc., to demonstrate that this forum is important for the Commission to listen to the African partners. And We have other platforms such as the ICT Best Practice Forum, where we have also collaborated with the private sector to organize the forum in Burkina Faso. At the local level, we support regional fora, such as the ECOWAS Investment Forum. We have also supported the COMESA Investment Forum. By the way, the ECOWAS started actually in Brussels. The first one we supported its launch. Now it's an independent forum. It's even financed by the private sector, but it is still an ECOWAS forum, very much supported by the ECOWAS Commission. So this is in terms of public-private partnership. I will not dwell into the details. It's simply to say that we are very much in favor of such a dialogue between the public and the private sector. We do in studies, both diagnostic studies, but also feasibility studies and the assessment of investment opportunities. I will just mention maybe two examples that I consider a success in terms of speed of how things have been done. We have worked with the ECOWAS Commission to assess the feasibility of setting up an investment guarantee fund or agency. I will not, again, go into the details, but the study has been done, it has been validated, the decision has been taken to create a fund and to entrust the management of this fund to the ATI, which is the Africa Trade Insurance Agency that is supported and launched by the World Bank and IFC, and I think BIG as well. We have other studies that hopefully one day will lead to some concrete implementations. I will not go into the details again, but just mention the Abidjan-Lagos corridor, where we have, with the private sector, developed a program for this corridor. In terms of reforms, we have worked with UHADA, especially to draft and get approved a new uniform law on cooperatives. We have worked with COMESA on double taxation agreements, and I think that exercise is ongoing, and COMESA countries are negotiating double taxation agreements. They have identified non-COMESA countries to negotiate agreements with them. In terms of capacity building, we usually provide support to improve the capacity of both regional economic communities and private sector organizations. We are working I would say, a lot with the COMESA Secretariat and with the COMESA Regional Investment Agency. I think Pierre mentioned the rating and benchmarking of countries. Based on the global investment promotion benchmarking, we are supporting actually the COMESA countries to improve their ranking. We are also improving what we call the investor servicing system of the investment promotion agencies of COMESA. We are actually setting up investor tracking systems in a number of investment promotion agencies. So that is a support that we have been given to investment promotion agencies and regional economic communities. We do some training on PPPs. We have done some training in Swaziland for the SADC region on PPPs. We go, of course, beyond just training. We have helped Swaziland to define to define a PPP policy, and even beyond the policy to define implementation modalities. We have also organized symposia on bioenergy, and I think this one is quite interesting, and we will continue working on setting up or implementing the recommendations of this symposium in the SADC region and a similar symposium in West Africa. The main recommendation by the private sector people and by the NEPAD group is to actually set up an incubation hub for bioenergy. I have publications on this. I think we have quite an interesting concept where investors are there and they are really waiting for setting up such an incubation hub and an incubation fund to develop and finance bioenergy projects, and especially meet or address what is called the innovation valley death, which is bringing innovation and research to the market and to the commercialization of this research and development. So in just one word, what our approach has always been to, first of all, be very open to the requests and the applications that come from not only the governments and regional economic communities, but also, and I would say mainly from the private sector. We work a lot with the private sector, and then we bring governments and the private sector together, either in public-private dialogue fora, such as business fora, conferences, symposia, etc., or we can work together to undertake studies and even help to implement certain studies. I have a number of examples where, for example, in West Africa, in the French-speaking countries, we are now actually continuing the work that has been started by UNCTAD to simplify, harmonize procedures, and automatize procedures in that region. Thank you.
Thank you very much. Taz?
Thank you, Pierre. Good morning. I'm sure everyone in the room, they know African Development Bank. We've been actually serving to the continent for the last 50 years. We'll be 50 years old in 2014. I think it's going to be a big celebration. We've been working in many sectors through public and private intervention in the continent. But however, 7 years ago, we decided to set up the private sector department. And today, this department is delivering actually around $2 billion projects and capacity building programs. And out of this department, we decided to emphasize actually mostly infrastructure, because all of us, I am sure, we believe that the growth starts with the infrastructure. Out of this $2 billion, every year, actually, we've been investing almost around 500 from the bank's resources into infrastructure projects. Last 5 years, the infrastructure division of the private sector department put $1.6 million into private or public-private partnership projects. 41 projects were delivered, and $56 billion investments were realized. Why I am giving these numbers? Because we believe that business climate changed around the projects. Actually, last 5 years, bank has moved from being a development financier to a partner. We changed our attitude. We became partner with the governments, private companies, and other financing institutions. I would like to give you a very specific example today. I am sure it's going to excite everyone. That is called integrated infrastructure approach in Senegal. 5 years ago, we decided to work in Senegal, and we wanted to test a model, which is called infrastructure integrated approach. What we did, we worked on 4 very concrete projects: a new airport, a toll road, which connects the airport to the city, a port, expansion of the port, and also a power plant, basically creating the infrastructure backbone for the country. We worked so efficiently in less than 2 years. By putting only 185 million euro from the bank resources, we were able to achieve 1.3 billion euro investments in one country, which is Senegal. It was a huge success story. How this happened? The bank placed itself as an honest broker, trusted party. We didn't only work with the investors because we are private sector department. What we did was we crowded in everyone. We had very frequent meetings. And in each meeting, we made sure all the parties are around the table. The government, future investors, other lenders, and some of the NGOs. We wanted to make sure that people, they talk about their problems, their issues, and understand issues of one another. I'll give you a very specific example. In Senegal today, any private investment, if they would like to go and register the securities at the financial close, today, after the reforms, you pay a very symbolic amount for the registration of the securities. But 6 months ago, it was different. We had a power plant. Registration of the securities required 10 million euro. I am not joking, 10 million euro. Who comes and invests in this country? We negotiated with the government. We worked with the government. In fact, we told the government, who's receiving this 10 million? It's the Association of Notaries, not even the government budget. So we worked with the Minister of Finance and Minister of Justice. A presidential directive was prepared, and it was turned into a decree. It was approved by the cabinet, and the same project paid only $100,000 registration fees. So why I gave this example? Because we believe that if you work around the projects, you will be achieving more. So we also understood one thing. We have to work as a one bank. Working from the private sector side and also working from the public sector side, going and talking to the governments individually, it's not working. So we decided to put our efforts together. For example, in Dakar Toll Road, public sector provided loan to the government to put as the viability gap funding. As such, project became attractive for the private sector. And then we structured the project in a way, after certain hurdle rate means that when the traffic reaches a certain number per day, profit is shared between the government and the investor. So these are very concrete examples and tells us that if we focus on certain projects and work together with all the parties, we can achieve more. Certainly, we are going to build more on these experiences. Today, the bank became advisor to the government of Tunisia to prepare 6 PPP projects and advisor to the government of Mauritius to prepare 4 PPP projects. And we are not going to stop here. Now, we are setting up a new vehicle, which called Africa 50, named after our 50th anniversary, which will take all these experiences to a different level. Means that it is time for replication and it is time for expansion. Thank you.
Thank you very much, Taz. And so we're moving from investment client reform through infrastructure now to the financial sector. Michael?
Yeah, so I give you the private sector perspective on what we just heard about. And you'll be not very surprised, I'm sure, to hear that it's the same message. Partnership matters. But before I do that, just a couple things on MasterCard. We do not sell credit cards. That's the first thing I would want to say. The second thing I'd like to say is our key competitor is a 4-letter word, and it's cash, in case you were thinking something else. So with that in mind, just a couple of thoughts on how we are thinking about Africa as a private sector company. We are in 219 countries around the world. And Africa is our fastest growing. If you think about the growth potential, I'm not telling you anything new. Everyone will say it is the fastest growing continent. But if you look at it from the perspective of a payment company, so we're not a credit card company, we're a payment technology company. If you look at it from that perspective, it is quite an unusual region. So if the GDP is growing at 5.6%, the PCE, personal consumption expenditure in Africa, is growing faster than anywhere else in the world. It's about 10.2% this year. So it's doubling GDP. PCE is a driver for the payments industry, and therefore we like that. But then I give you one more interesting statistic. A big driver for our business is the secular shift from cash to electronic payments. If you take the CEMEA region, this secular shift is about 20% growth year on year. And in sub-Saharan Africa, some countries, Nigeria, for example, would be even above the 20%. So you can see it is growth potential that you would not see anywhere else. Now, over the last decades, growth in Africa has been driven by, a mix of, I would say, commodity experts, for political reforms, FDI. What we see today, from our perspective, and what we like about the continent is the fact that the political reforms have turned into fiscal reforms. For fiscal reforms, you need payment infrastructure because that drives transparency. The commodity-driven export economies have turned into economies that are increasingly driven by domestic consumption, urbanization, a consumer class building, an increasing middle class. And what do? They will need to pay and transact. Again, it's playing right into our industry. And then finally, foreign direct investment. What we see today is a lot more real trade flows, regional economic integration and global economic integration, which drives cross-border funds, which again is right into the payment industry. So we like it. We are Africa optimists. We take it very seriously. Now, if you look at the nature of the growth, it's much better. It is much more inclusive today, for the very reasons I just laid out, which is why we've changed our strategy in the last 4 years. We went ahead and we invested significant amount of capital into technology infrastructure, into knowledge transfer, into people. But many of you would probably see the same thing across a number of industries. So that is not something that is particularly new. But to the theme that was discussed here about partnerships, the one thing that we've done differently in Africa probably than anywhere else in the world over the last 47 years of MasterCard is the partnership approach. In 47 years, we've built payment businesses around the world, but it was always with one partner, which is the financial institutions, because you're essentially targeting the banked population. Well, in Africa, that doesn't work because 85% of the population is not banked. So, different business model was required. You talked about a different business model. We changed ours as well. It was a partnership-based model. You need at the table a regulator. You need, of course, the banks, but you also need the mobile network operators. You need technology companies, acquirers, merchant aggregators, etc. It is a very large group of people that need to come together to address the challenge of standing up a payment ecosystem. Let me give you an example where that has worked really well. In East Africa, the example of Kenya, everyone knows that, is probably the leading market in the world when it comes to mobile payments. But the government has taken a step back and asked the question is, so how do we take this to the next level? How do we make this a fully interoperable payment system that will not allow me just to send money to my grandmother on the shores of Lake Victoria if I'm on the same mobile network? So what else can we do? True mobile payments. So we engaged with them to build a national payment agenda, a national payment policy roadmap, whichever way you want to call it, and it's being rolled out as we speak. One of the measures in there is to move to chip standards. You all know the little card on the little chip on your Mastercard that you hopefully have with you, and that is latest payment technology, and it's coming to Kenya. And by the end of this year, there's going to be 5 million cards out in the market, which is about 40% of the number of cards that exist in the market. This would have not been possible without getting the regulator to the table, having the right policy framework, and the right partnerships across various technology companies and processors. In Nigeria, that's a bigger challenge. 169 million people, and the ratio of the unbanked is significant. So how would you ever create a payment ecosystem that covers that vast country with so many people? It was very clear that government is the only driver that will allow that. But getting together mobile network operators, getting together various players proved to be a real challenge. Now, we've done the same thing in the end that we did in Kenya, working with the government and defining a national payment strategy. And what came out of it, some of you may have heard about it, is Cashless Nigeria. And then there is a specific subset of that, which is Cashless Lagos. So the governor of the state of Lagos is personally spearheading that. And that is, in the end, the basis for what we're trying to do there, because there were specific policies put in place that incentivize the use of electronic payment and disincentivize the use of cash. Now, then we said, okay, so how will you reach pretty much every adult Nigerian, and while at the same and put a payment tool in their hand? And how do you at the same time address the biggest problem of electronic payments, which is the question who's paying and who's getting paid? So a national ID was the key project, and the government was working on a national ID anyway. But through that public-private dialogue, the conclusion was achieved to basically say we will turn that ID into a smart card. And therefore, this is the biggest financial inclusion initiative ever, anywhere in the world. So I think public-private partnerships, they can be the lever to make a real significant impact. Last example, South Africa, slightly different challenges than the two examples I've just given. It is a very well-banked country. The bank population ratio is about 40%. But here the government basically approached this from a different perspective, and we had the dialogue with them and say, how do you save money? How do you avoid wastage, leakage, and fraud, and ensure that you take that money and reinvest it back anywhere else in the country where you need it? So the disbursement of government payments was seen as a effective area to look at, or a very important area to look at to avoid leakage, fraud, and inefficiency. So we created a program together with the government to distribute social benefit payments, and there's today 10 million cards out there, and this is in a matter of 1.5 years. 10 million cards, that's 20% of the South African population, hold a card in their hand, and they receive their money from the government only on that card. The financial inclusion index of the country of South Africa changed in 1.5 years by 4 percentage points. That has not happened anywhere else. Again, none of this would have been possible without getting the government, the banks, the payment technology company like ourselves at the table. So this is the new business model. We are now taking this outside of Africa. We're re-exporting that to Asia, to Latin America, and even in places like Europe, you would tend to think electronic payment penetration is very high, but taking cash out of low-value payments is the same challenge everywhere around the world, but you need partnerships. I give you, in a developing country, it would be, let's say, the mass transit authority. If you have them at the table, you will displace cash because that's what everyone does every day, use the train. So in the end, we like Africa for that very reason. It is a new business model for us that works well. Thank you.
Thank you, Michael. So we now move to Nader for a more macro and risk perspective on our topic. Nader?
Sure. Thank you very much, Pierre. Good morning, everyone. We at Macro Advisory Partners work with large macro investors and corporates and governments on helping them understand the intersection of three key factors: policy, politics, and markets in investing in new markets. And it's about an intersection that really matters more now than probably ever. Given the scale of the macro shifts going on in the global economy, given how much policy has been a determinant of economic growth, particularly in the last 5 years since the financial crisis, both in the developed world and certainly in the developing world as well. And as we talk to clients and we work with clients on the investment climate in Africa, there are really 3 points that and themes that we really emphasize. One is really how you shift the basis of an investment in Africa and how Africa is able to achieve this from a political judgment to an economic judgment. And that has to do with conflict questions, that has to do with governance questions. The second key theme is about seeing Africa very much more as 54 distinct countries rather than one, but in lots of ways for Africa to see it as one country rather than 54 distinct ones. And that's a duality that's important on both sides, and I'll say 2 minutes about that. The third piece, and this is Michael very much really talking, I think in a very fascinating way about the 2 drivers here: technology in the private sector together with government really transforming the economic base. And that is about a new relationship between the private sector and the state in a lot of these places, and I'll say a bit about that. The first theme really is about governance. I mean, if you look at the last 25 years of Africa's development, certainly relative to India and elsewhere, it has been conflict, and all of you know this very well, that has set back progress. What we are seeing is both in terms of conflicts a much, much better, robust management, and fundamentally a different set of incentives and motivations on the parts of leaders. I'll tell you, 3 years ago now, at a dinner of African CEOs in London, I was seated next to a president of a West African country, oil-rich, not known exactly for its governance, but it was President Kagame who was speaking. And there was broad applause in the room, and when the applause ended, this president turned to me and he said, in 5 years, I'm going to come back to this room, and all of you are going to applaud me the way you applaud him. Now, that's a statement of intent. It's a state of ambition. We'll see how much progress can be made, but it's about how increasingly a number of important elites and government entities in Africa wish to be judged as successful. And that is about demonstrating leadership on governance, creating the right kind of environment for transparent investment, and that is a very important driver of this. Fundamentally, for a lot of markets, Western markets, it is a very paradoxical thing that they're willing to fund and accept technical risk. If you look at whether it's in infrastructure or technology companies, telecom companies, certainly in the energy space, much more than they're willing to understand and navigate and quantify political risk. And so one of the challenges here is to continue what has been a challenge for Africa, which has been the political risk perception, but actually the management of that through better governance, I think, has been a very significant driver of the growth of the last few years. So this shift from the basis of investment, from political risk and political understanding to investment, is only really possible through the kind of governance improvements that we're seeing, and that has certainly been affected also very much by how multilateral institutions have engaged. The second point I wanted to make is about this notion of, we know certainly the lack of infrastructure, the lack of interregional connectedness. East Africa, West Africa is a huge hindrance. If you think about the fact that 80% of US GDP is domestically generated and only 10% of African GDP is generated from within the continent, this is a huge, huge gap that needs to be bridged. Obviously, the African Development Bank and President Kaberuka has been hugely focused on this. What is also important, however, is for outside investors to see a number of these African countries as much more distinct than they do now. And that is not because you don't want a steady development for everyone, but it's the reality that in every geography, that some markets are ahead, some markets are improved in governance, and actually the leaders can help drive progress in other countries. So both being able to see Africa from an infrastructure perspective, from an investment perspective, as more whole, but at the same time also appreciating the differences is going to be very, very important and is important to investors. The third and last point I'll make in this opening session segment here is this new relationship between the private sector and the state. I think there's been a huge amount of caricature in the West about the nature of Chinese investment in Africa. I think it is often much more constructive. I think a lot of the criticism from the West is frankly fairly biased because it's a competitive situation that they'd rather not see. And third, it's about, I think, understanding that for a lot of states around the world, not just in Africa, getting a different relationship between the private sector and the state is going to be hugely important. It's not about state capitalism on the Chinese model, but it's certainly also not about the very liberal model that we see in certainly some Western countries and don't seem to be delivering all that well. There, I would say again, it's about a much better interaction between the private sector and the state. It's not about state capitalism per se, but it's about a capitalist state. A lot of these countries need more state, a smarter state, a better set of institutions and predictability. And that is very much something that the private sector can help encourage. Michael talked about this in his business, and we see it in other businesses as well. So the caricature of wanting less state involvement, less of a state role in the economy is actually important to be clarified. It's a smarter, better state that's needed often, and by the way, that goes for India as well and a number of other emerging markets. And that understanding for the private sector and the state to work better together is going to be a huge impact. So the investment climate, broadly speaking, in Africa, yes, there's much more of a sense of opportunity. The fundamental structural drivers, demography, energy, and the like are there, but it is the governance question that needs to be continually put front and center for Africa's growth to continue. Thank you.
Thank you, Nader. And finally, I'd like to welcome to this panel His Excellency Diène Farba Sarr, who is Minister of Senegal and Director General of APIX, the Investment Promotion and Major Projects Agency. Excellency, if you could give us some short comments, that would be very much appreciated, and welcome to this panel.
Thank you very much. Good morning. Presently, I am the Minister of partnership and investment in Senegal. Bon, I speak a very bad English, but I speak only French. I want to tell you the climate affair of Senegal and the priority measure. I read simply because I don't speak. Okay. Administration procedure automation in Senegal, launching the remote procedure for obtaining the building permit, generalization of the tax payment declaration, business creation processes automation, completion of the computer, it's very difficult for me, transfer of ownership, computers, the credible land information system, commitment charter on the Insurance of Administration Act. You understand? Now, implementation of tax and legal incentive and simplified system in Senegal, improving the legal and regulatory framework, completion of the Civil Code of Procedure reform, improvement on the Public-Private Partnership Act, preparation and adoption of the Public Service Delegation Charter, increase the number of signed and ratified API, Accord of Promotion and Protection of Investment, contribution to the implementation reform in the ECOWAS and OADA zone. In Senegal, priority measure, growth of the funding level, innovative land reform, exchange and partnership between large investors, local community, and local farmers, economic zone and private investment cluster, training on the learning, growth of manager agriculture and irrigate land, national political movement based on multimodal, availability of diverse energy and competitive price, strong social impact investment, high impact investment charter, council for emerging region, development of business incubator areas in university and viable business space, business competition for emerging startups, finance instrument, strategic investment, regulatory framework for social housing in the Omnical Center. Achievement 2012-23, reform in 6 indicators. 6 indicators. Business creation time reduced to 24 hours since January 23. Cost of entrepreneurship reduced to at last. Dematerialization of the business creation procedure in Senegal. 2 indicators, building permit, reduced delay in entering building permit from 2019 to 14, reducing delay of using certificate of conformity from 5 to 3 days, reducing delay in using urbanism certificate from 10 to 3 days, dematerialization of the building permit in the procedure, reform ownership transfer, cancellation of state authorization for real estate transaction resulting of the gain of the on again of 50 days on procedure as an impact, reducing delay in using actual duty certificate from 5 to 3 days, merging procedure of registration, formality, and advertisement fees for Publicity Act, reduce rate of ownership transfer from 15 to 10. Tax payment, availability of the 12 return online, introducing a real tax payment system for Lime with revenue less than 100 million CFA, implementation of the Medium Enterprise Center, implementation of investment-friendly measures packaged in the CC. Justice trade in Senegal, adoption of the law amending civil procedure code, holding the trial schedule and the implementation of all commercial rooms for the period 20, reducing the cost for using civil and commercial documents, border trade, complete dematerialization of foreign trade, modernization of the removal of goods and the democratization of current transport process. I excuse me simply because I speak very well French, but English I speak very, very bad English. But I want to go here and to tell you the situation, the position of Senegal in the voilà, in the affaires. Vous avez vu, bon, moi je suis
Parfait.
français.
Non, non.
Bon, voilà.
Merci.
Okay. Voilà. Et donc, je m'excuse franchement. Bon, voilà, moi je suis trop francophone. J'ai fait mes études en France. Bon, voilà. Et donc, il m'est très rare de venir, de venir, par exemple, dans les pays anglophones. Mais je maîtrise parfaitement l'environnement des affaires au Sénégal. C'est un environnement, le Sénégal, par sa position géographique, par sa démocratie, vraiment a étincelé dans le cadre vraiment de l'environnement des affaires. Et nous avons fait beaucoup de choses avec le président Macky Sall. Je veux dire, tout simplement, nous avons créé ce qu'on appelle le programme de réforme des affaires et de la compétitivité. Et 4 axes ont été choisis. Et parmi ces axes-là, ce que je vais vous dire en anglais, et parfaitement, nous sommes dans une bonne position au Sénégal. Vraiment, nous sommes là pour attirer les investissements et former ce qu'on appelle la formation brute en capital fixe. Et nous avons, en 2012, fait au moins 4 milliards, j'ai dit 400 milliards, 892 milliards, 92 millions en investissement direct étranger. Et je pense que c'est une bonne affaire pour le Sénégal. Et ça va jouer dans la croissance, parce que la croissance, vous savez, par l'offre et la demande. Et nous avons utilisé l'équation Y est égale à, vous le savez bien que moi, Y est égal à la consommation plus les investissements, plus les G, les dépenses publiques, plus le solde de la balance commerciale. Et nous savons qu'en Afrique, la balance commerciale est toujours déficitaire. Nous avons utilisé maintenant l'investissement en ramenant quand même l'environnement des affaires beaucoup plus incitatif pour créer ce qu'on appelle la formation brute en capital fixe au Sénégal. Je vous remercie.
Merci, Excellence. We just have a little time for a few questions, so I'll take a few questions and then I'll get the panel to respond before closing this session. So do we have any questions from the audience? Yes, John.
This is a question for Nadia. We totally agree with you. I'm from the World Bank, and we totally agree with your analysis that governance has been a key contributor to growth. What I would be interested to hear from you is, what are your ideas in terms of moving the agenda forward? Are there any specific kind of recommendations or thoughts you have on how to push that idea forward?
Thank you. Other questions?
Please identify yourself.
Yes.
Please identify.
It was John Speakman from the World Bank who just spoke. Yes, David.
David Bridgman, and also with the World Bank Group on Investment Climate. I love Taz's story about the reduction of the cost of the notary fees by $10 million. This is a huge issue throughout West Africa. That proclamation you got, did it apply just to that project, or is that a new reduction of notary fees throughout the economy?
Thank you. Other questions? Yes, over there in the back. Over there. Can I have the microphone?
Yeah, my name is Jerome Mongo. I'm from the NEPAD Business Group, West Africa. I think I heard what Mr. Sheriff Ahmed said. I would like to know if you can give us an overview of the investments made related to the improvement of the investment climate by regions. I precise. West Africa, Central Africa, East Africa, Southern Africa. That will give us an idea of how we can come up with the gap, because the exercise made by the World Bank is good when we're talking about doing business, but we need to come up with to cover the gap within Africa. Thank you.
Thank you. And maybe a final one for this round. Yes.
My name is Omoy Gehon from Portals Global Consulting. And the question I have is for Neda Anvaripur. It's about PPPs. Just so I want to have a general question about, or general questions about how PPPs are initiated. Are they always from the government side, or could they also be from the private sector side? What are measures for success, and what are the major milestones that need to be overcome for the next level or next phase in PPP development, especially in West Africa, well, Sub-Saharan Africa. Thank you.
Thank you. So, Nader, you want to start?
Sure. We can maybe continue afterwards, because it's a vast subject. But let me say a couple of things. I think in terms of where you see the governance, the impotence for governance improvements continuing, I think it's partly a willingness to reward those who are making the shifts on the margin, but are quite a far distance still from where they would like to be and where investors would like them to be. And I think there's a still lack of willingness to be sober and realistic about the long paths. But I think if you look at a number of countries in West Africa and East Africa, on the margins you see political leaders taking decisions, improving governance, improving predictability, rule of law, where it's still not adequate to whatever measures in an ideal world, but I think embracing that, working with them closely, whether it's Kagame or elsewhere in West Africa, I think that's important. Secondarily, what I see when I spend time in Africa, both with multinationals and governments, is much more of a willingness to experiment with models. And I think whether it's the Brazilians and the work they're doing in the kind of partnerships that they have both in West and East Africa, the Chinese as well, I think this is a challenge to, and I spent almost 10 years at the UN, it's a challenge to traditional multilateral institutions, but I think there are other models that are coming in. Different relationship between an investor, the public-private partnerships that countries like Brazil and China are initiating, and I think there should be more of an openness to that, as long as it's consistent with the broader improvement in governance. So more imagination, willingness to take a long view, willingness to help push where the start is there, but still lots of challenges remain. Those are some of the policy, I think, perspectives that will be important, but there's more to say on this.
Thank you, Nader. Taz?
Yeah. Let us start with the fees, registration fees. Actually, I think Minister was a little bit late. He missed the whole Senegal story. But I think all the things he counted, they were actually the whole reform program in the last few years. I just gave you one example. As I mentioned, we did 4 projects in Senegal between 2009 and 2011. And actually, it was 1.3 billion euro foreign direct investment into the country. And in the first and second one, we were not able to achieve this specific milestone. But the third and fourth one, we decided to be very strong, and then we made a decision, this has to change. This has changed actually not only for one project now. We realized that custom-made solution for each project is not going to be efficient. So therefore, this is actually for all the future projects. And it is a big milestone for government of Senegal. And the Minister of Justice right now, she is the Prime Minister. Actually, she led this process. And what is next? We would like to take this to all OHADA countries. So PPPs. I always call PPPs a little bit different than public-private partnership. I think our experience in the last 5-7 years, we've been extremely successful in PPPs. And it comes from, there are a number of things. Other P's. One is, patience. The other one is passion. The third one is preparation. I always call, actually, triple P is preparation, preparation, and preparation. So we work very hard with number of investors, but we also work very hard with number of governments. We wanted to understand what model is going to work better. But again, it comes at the end as partnership. So we decided to work with both parties. If an investor is preparing a PPP project, we would like to be next to them. In fact, in most of the projects we delivered, 41 of them in the last 5 years, we've been almost co-developer. Some of them, we were paid success fee or little bit advisory fee, but we were there. Why we were there? Because we have quite a bit experience and then relationship, very proven relationship with the governments. So we can utilize and we can leverage. And we also work with the governments. Now, I mentioned earlier, we are the advisor to the government of Tunisia and advisor to the government of Mauritius for preparation of PPPs. If you look at the African infrastructure market, what is the biggest issue? Well-prepared projects coming to financial close. I mean, how many projects we are closing per year altogether, all financial institutions, not too many. So therefore, we decided to use our experience in the new vehicle, which is going to be called Africa 50. We will have a very large project development component, which is going to be around $500 million, where we would like to partner, we would like to set up joint venture with the governments or with private parties. We are determined. We want to play a role in the closing the gap of infrastructure in the continent. We all know that number is 100 billion per year. 50 goes funded, 50 goes unfunded. And if you look at who's funding 50, mostly governments and DFIs. Both, they are having financial constraints today. So therefore, game needs to change. Actually, that's why we decided to take the bank to a different level now. We prove in the last 5 years we are the game changer infrastructure, and we would like to take this one to the different level now.
Thank you, Taz. Mohamed, the question for you.
Well, I don't know if you can answer the question without having the exact figures with me. All what I know is that, well, first of all, the total share of Africa into total investments remains really very low. I think it's around 5%. Which is simply unacceptable. The second thing is that when we look at investments into West Africa, and I guess you were referring to West Africa, total investments have increased very sharply in recent years. One should look at where those investments have gone to, is it oil sector, mining, etc., or in other sectors. I think the analysis is there, but unfortunately I cannot give you the exact numbers right now. What I would like to say is that if you look at the investment funds that are available and the money that is geared towards just, for example, bioenergy, because we have done some work on this. Bioenergy, that money that is available to Africa, about 27 billion from the US, about 8 billion from, let's say, funds that are in London. Very little goes to Africa right now. And that's really the importance of, I think, the public-private partnership and the dialogue we have discussed, is that when you go into the nitty-gritty, you discover what would bring investors. And some people have mentioned some factors. There are many others. For example, in the southern part of Africa, you cannot move money from one country to the other. From South Africa, you cannot lend to Zambia, etc. You have to do due diligence for each project in different countries. You have mentioned East Africa, which is a success, yet there is a huge potential of investment in infrastructure. The Northern Corridor, but also from the port of Lamu up to South Sudan and Ethiopia. PPP framework is there in Kenya. It is probably there in Uganda. It is there in Tanzania. Also, some people might find it a little bit difficult to invest there, but the framework is there. But the framework is not yet there in Ethiopia. It is not yet there in other countries. And I think there is still a lot of work to be done to enable these cross-border investments and these regional investments to take place.
Thank you.
Just a note of caution.
I think we need to wrap up our panel. We're already a bit over time. So I'd like to just make two comments to conclude. Is what struck me today is certainly one major theme that all speakers addressed. It's the importance of partnerships. And this may seem trite, it isn't. These are rather complex endeavors. It's kind of getting different partners to engage with one another in ways they may not have been used to work together before. So to me, that's an extremely important issue. It's partnerships and getting the private sector to kind of mobilize to help the government improve the business environment, the investment climate, is partnerships to find solutions, technological solutions for example, payment systems, amongst other examples, and new solutions, creative ones that are not just adopting what the neighbor has done. Partnerships for financing also, where more and more we see that simply opening up a market may not be enough, and to unlock opportunities, you often need to create these partnerships that will give the private sector confidence, that will create the transition into a more open and dynamic market. So I think we all play a role in contributing to these partnerships. That's my really main takeaway. The second point is, again, through most of the comments we heard today, the importance of finding ways to integrate markets more effectively, to allow people to do business across country, to transfer money, to invest across borders, etc., to connect infrastructure from country to country. So I'd like to wrap up with these two themes that cut across the presentation. I would like to thank all the panelists for their excellent contributions. Et merci à vous, Excellence, d'avoir partagé avec nous ces propos sur le programme de réforme très important que vous menez au Sénégal et qui a l'appui de vos partenaires. So, ladies and gentlemen, thank you very much.
Doing business in Africa, you can't afford to be without Africa Investor.